Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. I had a question a couple weeks back asking me what are my top 10 indicators. So I thought I'd put together a quick speed running video on how I integrate all of these together. Kind of like having, 10 people in a room shouting ideas at you and you're trying to figure out who's the most important, which one's your favorite child, which one's the redhead of the room, just kidding, which one matters more. Collectively, they all, in a way, tell you extremely similar, if not the exact same thing. But at the end of the day, for me, the most important indicators are always the ones that help point to what is the status of the trend. Are we bullish? Are we bearish? Or are we neutral? That's it. That's all I need to know. Then from there, we can talk about overbought, oversold. From there, we can talk about momentum and volume and OVV and CVD and all this other stuff, right? That's always secondary or tertiary or quaternary to all this other stuff. If your trading system isn't helping you figure out entry, exit, stop loss, then to me, it serves no purpose, right? Over the years, I've drifted away from discussing on-chain activity because to me, it doesn't really help with any of that. Doesn't help with trend, entry, exit, stop loss, nothing. MVRV is the one exception I'll talk about at the end because it's historically acted as a very strong overbought, oversold oscillator throughout multiple periods in Bitcoin's history over the past decade. Something else that should also be built into your system is where am I wrong? What are the failure conditions? Basically, what are the breakpoints where this trade goes the other way? That can be both a stop loss to the downside and to the upside, right? Where should I be bullish despite being bearish right now, right? As an example. So all these are in no particular order, but the cloud is by far and away the number one indicator that I use personally using the 2060, 120/30 settings for me, right? This is my system. This is what I like. This is what I talk about. It's okay if you don't like any of this stuff and you prefer something else. It's okay if you use different settings. That's okay. I don't need to hear about it. Okay. I realize my trading style is not everyone's trading style. I'd advise you to experiment and poke around and see what you like. It's a buffet, right? I talk about that all the time. If the ribs look good that day and you're into ribs and you want some ribs and you want to add some barbecue sauce, right? That's up to you. I'm not going to force you to eat the chicken sliders on that day if you don't want. Okay. Do what you want to do. I'm just giving you examples of what I do. So we'll look at some charts in a second. But collectively, again, all of these are helping me paint a mural, look at the panorama. To borrow the Bill Williams example, look into the fish tank. Are the fish healthy? Do they have enough oxygen? Is there too much ammonia? Do I need to clean the glass? What is the aesthetic component? Are the fish happy? Would they prefer rocks? If the market is the fish tank and we are the observer, do we need to feed the fish, right? What do we need to do here to make the fish happy? The one outlier of this list, other than the MVRV, would be Bollinger Bands, which I mainly use for low volatility periods. I know some people use these all the time. For me, they work best to just quantify when a breakout is likely to occur based on volatility. That's kind of it. And other than cloud, chart patterns are easily the indicator that's made me the most money over the years. Just knowing basic stuff, like seeing an ascending triangle or recognizing a head and shoulders. It doesn't have to be perfect every time. It doesn't have to look pretty. You don't have to trade every pattern, but merely acknowledging that it's there will certainly help you size appropriately, leverage appropriately, take profit appropriately, that sort of thing. Pivots are typically an exit condition or a target condition, like a take profit level. The specific example that, interestingly enough, is just today, right? When we're looking at consolidation around a pivot, for me, so this is a yearly pivot at 38K for BTC, if you're watching this years from now, and we are 10x from here. But typically you'll see a move into a pivot, into a high time frame resistance level, and then the market has to make a decision. Do we want to consolidate around that level, around that horizontal level, or do we just want to hit it as resistance and reverse? So as I said, I'm typically using everything together. So this is an ascending triangle. This is great obvious resistance at 38, multiple touch points here on the resistance as well as the support. And then from there, I always on any chart pattern, always just measure it out with the fibs. Every time I do the same exact thing. I don't use the 1.886. I don't use anything else. Always the 1618. Okay, this gives me a range where if this pattern or any pattern breaks out or reverses or continues, whatever, this is where you'd expect an attempt for the move to at least reach. We may then consolidate from there. We may then immediately reverse, but at the very least, it gives you some idea of where we're going. Okay, at least for me, because then I'm not closing at 39.6. I'm not opening the trade expecting X% move below this level. If I open a trade based on this pattern, based on the depth of this pattern, minimum I'm expecting 40. Now I know the weekly cloud's at 42, right? You can put this 10,000 piece puzzle together using other timeframes and other indicators, but for this one specific breakout trade, that's what I'm looking at. For trend specifically, the 200 daily moving average, as silly as it really is incredibly important because everybody's looking at it. Something else that's maybe less obvious has been for Bitcoin, at least the 20-week moving average, as well as ETH for that matter. Most other coins don't really have enough data to really backtest that appropriately. I'm sure Sol probably looks great on the 20-week moving average, but trend is important because you really shouldn't be counter trend trading most of the time. I mean, you need extraordinary evidence to do so, right? You know, earlier this week I was talking about TKC clamp, which is still there. That risk is still there. That means I'm not sitting in a leverage position throughout the week expecting to just magically break up. That means I'm cautiously longing even at this level with this ascending triangle breakout. But one thing I'm not going to do is short this. I'm not going to short Sol. I'm not going to short Bitcoin based on that alone, because right now the overwhelming evidence for trend is bullish continuation. Williams fractals are great for trailing stop losses. I'll talk about that in a second. Any oscillator is fine. I prefer RSI. Some people like Stoke. Some people like MACD. Some people like OBV. Whatever you're more comfortable with. For me, it's just to help visualize divergences a little bit better, but I don't really need RSI. The cloud works just fine for that. You see me talk about channels all the time because one thing the cloud doesn't always give you is a target or a time point for X price, right? 33K by July was born out of pitchforks, channels, that sort of thing. All of these channels also act as an oscillator because they tell you, are we overbought? Are we oversold? And ultimately, again, are we in a trend, right? All this stuff sort of talks to itself as far as where we're going. And, you know, we can break it down even further and look at Ichimoku specific things, exit conditions, trend conditions. Really, this is also entry conditions as well. And then a quick little screenshot if you want to grab it on just basic chart patterns, right? If you know just what these are, where they're wrong, what the breakout looks like or should look like, there are many more that are occasionally popping up, cup and handle, Adam and Eve, double bottom, right? That sort of thing. But these are chart patterns because they pop up all the time on every market. And that really goes without saying on the indicators. If your system or your indicators don't work so hot on every time frame and every market, then you probably need to refine something, right? I'm fairly confident that on anything, throw any chart, throw any time frame, the same principles will apply, right? It may be noisier, you may get stopped out more, but they all should be just as effective to some degree, right? All right, so let's take a look at some charts. I'm just going to point out indicators and failure points here. None of this stuff should be anything new to people who've watched the channel for any period of time, right? I talked about this stuff when I worked for Brave New Coin, when I worked for Valkyrie back in 2016. Right? It hasn't really changed for me since 2016 for the most part. You know, I'm not adding things to my system as time goes by because the list of things I use are fairly effective for me. So we've got a chart pattern, ascending triangle. We've got yearly pivot resistance here. We measure that chart pattern. We know it's a bullish trend. We know there's a news catalyst or whatever else, right? That's like ancillary to what we're looking at here for technicals, but that should also be helpful on this trade. For triangles specifically, they typically break out when 3/4 full. We're just about there. You can always measure that to the day or to the time point. I also like that we bounced and bounced and bounced on this over and over and over again. Occasionally you'll see people drawing diagonal lines or horizontals with like no touches at all and calling it a pattern. This is kind of the best case where even if this doesn't play out as expected, I'm extremely confident that this is in fact an ascending triangle, just based on the shape here. Previously, I was worried about a head and shoulders fractal, right? I didn't buy this and I'm not going to buy this, but as we go along here, yeah, I'm going to trade this as a breakout, and that's what I've done. So even if I'm wrong, I'm confident enough to take the trade. Currently, your stop loss on something like this would be a 4-hour close below 36.5, any local low. I don't need to see fractals on this. I don't need to see anything else when it's a chart pattern like that. Alternatively, we're also in a trend channel, which is also telling you, look, it's been up and to the right. So again, until this changes, this is your micro trend for the past couple weeks. So longs are probably pretty safe relatively, so long as we hold this channel, right? And that's the basic principle for any pitchfork, channel, power law corridor, whatever you want to throw at you in the analysis section. Generally, that's what you're looking at. Now, yes, we have an oscillator built in, overbought, oversold, assuming the channel holds, but the channel can always break in either direction, obviously. ETH, very much the same, right? If we throw everything on this chart, something I didn't even mention is, throughout the years, you'll have your own catalog of stuff that you've traded and seen and been confident at how this acts. And that's super important. I call it forward testing, right? Everybody talks about back testing, back testing, back testing. Great. Yeah. Back test anything you want. But until you're actually sitting through this and trading it, because you're exposed to everything, right? You're not just exposed to whatever the back test is. You're not a robot. Most people aren't. So it should work on back testing, but it should also definitely work when you're actually trading this stuff, okay? Because I can guarantee you if this breaks out, which it should, on back testing, people will say, oh, look, that was an ascending triangle. It was obvious, right? But we all know, sitting through this over the past 6 months, how agonizingly slow this chart pattern has been on ETH. What most people don't know, because they weren't around for Bitcoin in 2015, that was also agonizingly slow. That was 250 days or something, okay? Was I nervous this was going to fail when we broke down out of the diag? Definitely. What's really helped ETH is the entire ecosystem sort of reversing. But this one here, we've got VPVR, we've got cloud, we've got a fractal to remind us, we've got a little picture of volume here per day. What you want to see always is, just like in Bitcoin in 2015, you want to see volume confirm the breakout on any breakout trade. VPVR can help you look for volume resistances that you wouldn't otherwise necessarily see. Now, there aren't many horizontal levels you can really point to that are obvious on the way up, maybe 25, but generally there's not too much volume resistance on the way up, which is a good thing if you're bullish, right? If you're expecting what I'm expecting, 27 to 31, whatever that is. And you can say, sure, there's confluence here. XYZ, ABC, all point to the same target. You also have to remember all this stuff is looking at the left side of the chart to help you with the right side of the chart. So you do have to be careful, because most of the time it's just looking at the same stuff and telling you the same thing, right? But I'm using 5 of my 10 favorite indicators just on this one chart, right? 6 actually, right? Fibs, cloud, VPVR, volume, pivots, fractal. Fractal's not really on there, but chart pattern. Anyway, most of the time you're probably going to use most of what you consider valuable in any given trade setup. Bitcoin's the same. Again, trend channel gives you some idea for a reasonable rate of change, gives you some idea for time points hitting certain levels, gives you some idea for overbought, oversold, where's the midpoint where price wants to live or reconsolidate. So for instance, if we go to 47 by April 2024, 38 to 40, still definitely in the cards just based on the trend channel. It would be perfectly acceptable to return to that midpoint. And even then, if we go lower, we're still within the acceptable bounds of the trend. And this stuff certainly becomes more valuable to you once you've seen it a few times. I don't have 50 years in my belt, but I do have a decade of crypto, and that feels like 50 years most days. This was a great example. Cloud edge-to-edge trade with a chart pattern, right? Typically with reversals, you'd get a chart pattern. Same here, chart pattern. Descending triangle, ascending triangle, move through the cloud, move through the cloud. Sometimes you get continuation, sometimes you don't. But if you were to measure both of these patterns, those levels were definitely hit and then some, which is one reason I like the cloud, right? It it gives you an idea way in advance. Okay, this is one of my earliest charts. You can dig it into my Twitter somewhere, videos somewhere, but this was like September 2016. Okay, I didn't know anything about Wyckoff, but in hindsight, Wyckoff also called this beautifully. What the cloud allows you to do is have a little bit of a advanced notice of where we might go, because at this time we were talking about failed experiment. People were losing their religion. I was ready to go down with the ship, so it didn't matter to me either way. But looking at the cloud like this at that time, I was like, oh, flat Kumo equals magnet. We might get this edge to edge, and the rest is history. We really had no reason to go up at this time, other than technicals, other than just being sold off for many, many, many months. I'm sure there were some positive news catalysts here along the way, but the technicals don't know that ahead of time, right? They're just looking at resistance levels. And what the cloud is telling you here is that we've held this level for enough months. We've had enough pain to start to establish support resist levels, establishing low, establishing a 50% retracement level that makes sense. And eventually we return to that 650 level. If we look at today's cloud for Bitcoin with Williams fractals, which for me act as a both entry and exit system within trend, I had some people asking me about the 28 level down here. And when we're lining up for a Kumo breakout, I pay less attention to the Kumo twist, but it's important. It adds confidence. And I know that on these settings, on a daily chart, a Kumo twist is usually, a Kumo breakout in this case, is usually good enough as a trading signal. So fast forward to today, we are overbought. We are building this TKC clamp. It says be careful. It doesn't say we 100% have to retrace. The logical conclusion, or the end conclusion, if we do not break out, will be a bearish TK cross. So the way I play that is I'm still in the market up here with a potential expectation of mean reversion until we get that bearish TK cross. That is my exit of any active trades from the breakout. A trailing stop loss you can use in addition to the TK cross would be the Williams fractals until we get a close below the most recent support fractal. You stay in the market. When you get closes above a resistance fractal, you add to your position. So currently we really haven't had a add or subtract signal based on the fractals this entire time since the breakout on the daily. Now you can always cheat this a little bit, go down to the 12 hour, look at those fractals if you're sort of hemming and hawing on what to do. But for the most part, these are great signals that will help you trade the breakout, stay in the trade the entire time, right? This was ugly chop, has been for weeks at this point, but both the cloud and the fractals are telling you it's okay up here. Now, if we don't go anywhere, if this ascending triangle doesn't pan out, whatever, right, and we do get that TK cross, I'm out until a bullish TK recross. The problem with holding past the TK cross is that you're risking price reversal, because at that point, you've lost momentum. That's what that's telling you. And if we're just high in the sky here, far above cloud support, then we risk returning to 32 anyway, right? So it's all of this is giving you some sort of edge on a risk reward setup. I know this chart is potato quality, but the importance of keeping a journal, again, gives you this history of what you've done, what you've looked at, what you've analyzed, right? Even if it's a paragraph a week on stuff you're looking at least you can go back to it months from now and say, hey, was I right about that? Did I trade that correctly? Did that make sense? And again, I'm incorporating moving averages here. I'm incorporating a pitchfork, which we've since broken down from. I'm incorporating a chart pattern. I've got fibs on here. At that time, collectively, everything was saying we're probably going to reverse. And we did eventually, right? It took a long time to reach that level, but we eventually did. And that rate of change for that part of the trend was over. Then the next week, you can see where I'm talking about the potential edge-to-edge setup and why it's important to not still be long, basically, if you're expecting a traversal through the cloud. And on this chart, you can see the bearish TK cross price within the cloud. Sometimes it's late, sometimes it's not the best, right? But most of the time, it'll keep you out of trouble. So in this case, earlier in the year, Williams fractals, trailing stop losses, were much better than just waiting for that TK cross. Williams fractals here were also better than waiting for that TK cross. Here's another example. Chart pattern, moving average, another chart pattern, pivots, right? This eventually played out. It took a lot of time. It took another couple months, but here we are, right? Talking about a pivot to pivot trade. I'm talking about support on the 200-day moving average and multiple price projections based on depth of chart pattern. I don't need to know anything else. I don't need to know about ETFs. I don't need to know about the halving, just technicals, right? And here's some great chart puke. This is ARK. Again, your system should really work on anything. So many people were bearish on this, including myself when this started to break down again. And that goes back to where can this be wrong? Where's your breakpoints in either direction? We've had chart patterns obeyed over and over again. We've had continuations for reversals, pivots, right? VPVR, all this stuff is coming together for ARK to me and saying, look, this is probably primed for a reversal. I don't know if we get this target, but when you're in the cloud like this, you can certainly use daily fractals or something as a trailing stop loss. Solana is another great example. I don't talk about 3 drives a lot, but it's another, I'd call it a type of chart pattern. We tend to see in bullish or bearish thrusts. Almost always you want to see that divergence on your favorite oscillator. And a couple of weeks ago, I had said SOL will probably stop leading the market. And that's certainly what has happened. For me to jump back into this, what I wanted was measured moves of the 3 drives, 50% retracement, or what ended up being a head and shoulders that's probably going to fail at this point as we're curling up here. But what this told me was be careful, stop trying to long up here and just wait, right? It doesn't say short. It doesn't say we're guaranteed to go down. Clearly everything is super bullish, so you have to be careful with contra trend trading there. And this is the Williams fractal stuff. And again, all the way up, the Williams fractals, which I didn't listen to enough, we're telling you stay in, right? Trailing stop loss kept getting higher. The moving averages told you to stay in. We held above the midpoint the entire time until November 20th. MAs started to jumble, started to break down below fractals, right? So if we're looking at the fish tank and the fish aren't swimming fast enough and they're kind of at the bottom of the tank just hanging out, they look a little lethargic. You know, that's what this is telling you here. Momentum from the previous micro trend is over and a reconsolidation is taking place here. So to trade this going forward, you'd want to see bullish moving average crosses with prices above the most recent resistance fractal at 61. And this is just some random time frame, right? The time frame is irrelevant, but it is the 8 hour in this case. When we've consolidated for a good period of time, volatility typically dies down. And one way to look at that visually would be Bollinger Bands, which are looking at 2 standard deviations above or below a 20 period moving average. So you can see during the active trend, we held above that 20 period moving average, started to slow down, dipped below that. And now we're likely getting towards the end of the consolidation. Pre-breakout, if you are bullish, you want to see price above the 20 period moving average as the B bands are consolidating. And again, 61 is the level based on the Bollinger Bands telling you that's probably good enough to reopen a position or to open a position. So again, it's giving you entry, exit, stop loss. And then if you want more about chart patterns, I did a whole article in 2018 with some basics of chart patterns that I like. Tons of examples there. The 5200 cross gets a lot of media attention. Probably isn't talked about enough. None of this is perfect in a vacuum, okay? But again, it tells you and gives you a pretty good idea. Are we generally bullish or bearish? When we got the bearish cross, we slowed down. When we got the bullish cross, we sped up. When we got the bullish crisscross, we sped way up, right? Is it lagging? Of course it is. Of course it is. Can you trade on this alone? No. Does it give me confidence that we're headed up or down or we have momentum at all? Absolutely. And does it also act as some higher time frame support level? Absolutely, right? So it's definitely worth incorporating into your trading system. Let me just talk about Bollinger Bands again real quick. So when volatility dies down, you'll see me talking about Bollinger Bands. I talked about them last probably a couple months ago. I had said that even though we were consolidating above the midpoint, the 20-week moving average here, we still had this chart pattern that was suggesting a bearish reversal. So we didn't have confluence in that period of time. Certainly more of a mixed bag risk when you have indicators pointing in opposite directions. But again, that should help you with risk, size, leverage, making all those decisions appropriate. You know, are you max long or max short? Am I if indicators are pointing in opposite directions? No. You can see historically over time the importance of the 20-week there in 2016 and 2017, as well as 2020 and 2022. on the way down. ETH, very much the same on the weekly, currently consolidating above the weekly Bollinger Bands. Bollinger Bands are kind of wide as ETH is pushing the top side of the upper Bollinger Band. But again, the 20-week moving average has been absolutely money at giving you a litmus test for trend. If you just ask the question, hey, should I be short here or long here? Should I be looking to add or subtract? The 20-week moving average certainly helps you with that. Also, ETH's pitchfork here, to me, continues to also add to the confluence that we're at the bottom of a likely range that we've loosely held since 2019. So if this rate of change continues, yes, I very much like 4,200. The moment this drops out of the support of the trend channel, the likelihood of 42 drops to near zero. Okay, so I'm not just going to assume we're going to survive back into the pitchfork. But along with everything else on ETH and the trend channel, I'm pretty confident that 31, 42, those are all very possible. And lastly, I'll just mention MVRV. If you don't know, it looks at market cap relative to the last time coins have moved on chain, so it gives them a cost basis. What this means in bullish periods is that as prices going up, market cap exceeds realized value pretty heavily, pretty handedly. Of course, people are selling on the way up slowly, but if the market cap exceeds the unrealized value quickly, then you get spikes in MVRV like this. So what we want to see going forward is a slow rise in MVRV. Let people buy, let people sell. What we don't want to see is a massive spike all in one day. Slow trend is best trend. This is looking at Bitcoin. So I hope that was helpful going over the indicators I like. I don't think it's a secret. I use the same stuff all the time. And if you're using something I'm not, let me know in the comments below. What should I check out? What should I add to my buffet here? Should I add some macaroni and cheese? Do I need a salad bar? Stuff like that. Like, dislike, comment, share, subscribe, and happy trading.